All right, great morning, everyone. This is Kevin. Well, great morning, afternoon, whatever time zone you're in right now. This is Kevin, a common sense teacher. I am here to teach you about something that can put hundreds, if not thousands of dollars back into your pocket each year or each month, depending on how you have your form filled out. If you're looking at this morning, you're looking at the form W-4, and the W-4 is, in my opinion, one of the most important forms that you can fill out while you're employed. And so as a person who's working and living in America, this form is one that's, number one, it is filled out wrong almost 80% of the time. That means that out of 10 people, 8 people fill it out wrong. Or if you want to do 100 people, 80 people fill it out wrong. 80% of people fill this form out wrong. But here's the thing. It went through a huge change about 3 or 4 years ago. Whenever Trump took office 3 or 4 years ago, the W-4 form and the tax code for people who work a job changed tremendously, drastically changed. I don't know how to put it into words. I will tell you this: if you were working a job and you were getting a lot of your deductions from your home office from working your job, you probably noticed a big difference in your tax situation about 3 or 4 years ago, because they took away what's called the 2106. That's not what this video is about. Just know that change in the tax laws affected a lot of people, even going through COVID. Because if you think about it, a lot of people actually start working from home. So not saying it was intentionally done for that purpose. I will tell you this, that you do have to be in the know. And so today we're going to fill out the W-4 form. There's a lot of things that changed. This form actually became a whole lot simpler on page 1. And in my professional opinion, I don't think that was a good thing for everyone. So with the form, if we're filling it out, look, most of this form is just reading. So your the first part of the form, you're going to put in your first name and your initial and your last name. So that's straightforward. Then right here, you're going to put in your social security number, whatever that may be, whatever digit number you have. And then you're going to fill out your address, whatever that may be, city. And then whatever the zip code is. So once you get past the first simple steps, if you notice at the top, you have to put in if you're single or married filing separately, married filing joint, or head of household. Now, I want to break this down for you. Single is someone who has no children and they're not married. That's what that means. Now, if you want to go read what the IRS says about this, you can. I'm just letting you know, based on their rules, what single is. Married filing separately, when you do that, you lose a lot of your tax credits. I'm not going to go too deep into that today, but just know when you do married filing separately, if you qualify for any tax credits, you could potentially lose those just based on doing married filing separately. The next one is married filing jointly or qualifying widow. So married filing jointly, you do keep your tax credits with that. That's if you're legally married, not what you may call your significant other that you're not married to yet. You have to have paperwork to prove that you're married. And then last but not least, head of household. This head of household status only applies to you if you read right here. You have to be unmarried. That's important. You can't do head of household if you're married. And then last but not least, you have to be unmarried, and this is a conjunction, and pay more than half of the cost of keeping up a home for yourself and another qualifying individual. This is a dependent, someone who depends upon your income to live every day. So that brings us to, so A, you put in your name and everything. B, you're going to put in your social security number. And C, you're going to do what's called your filing status. Single, married filing separately, married filing jointly, head of household. And remember, to get head of household, you do have to be unmarried and pay for someone else to live. Okay, so now we're going to go to step 2. This is for step 2. 2 through 4, these are things that you have to pay attention to. Now, step 2 is about multiple jobs or spouse works. So you're going to read through this. Complete this step if you hold more than one job at a time. Or 2, you're married filing jointly and your spouse also works. The correct number withholding depends on income earned from all these jobs. So what I'm going to do for this, in order to really, really calculate if this applies to you, number 1, you can go use the estimator on www.irs.gov. And let me show you how that looks. So this is the estimator. All you're going to do is click here to use the tax estimator, and then you're going to answer the questions that applies to you. It's going to ask you a lot of questions. I don't have time to go through this right today. That's not what this was about. It's about filling out the W-4 form. So if you need a little bit extra attention or extra help for details, fill this out, and at the end, it's going to give you the instructions on what to put on your W-4 form. As you can notice, it goes through basic information about you. You're going to fill out your filing status, income withholding, adjustments, deductions, tax credits, and results. So that's how you do that. If you're not going to be doing that part, you're going to simply come back to the W-4 form, and you can use the multiple jobs worksheet on page 3. So we can go all the way down to page 3, which is right here. And as you can see, this is the multiple jobs worksheet. The way you fill this out, you're going to read through the lines. If it applies to you, you fill it out. If it doesn't, don't fill it out. This is strictly reading, everyone. Strictly reading. So then once you get to the multiple jobs worksheet, you're going to use page 4 as well. And you use these 2 pages combined to fill out page 3. If you notice, you keep this for your records. So you don't turn this form in. This is for you to calculate or estimate the information is asking for you in this section, but you don't turn it into your employer. And then if there are only 2 jobs total, you can check this box. And this is so crazy, but you can check this box and it's going to give you a roughly accurate withholding. If you notice right here, it used the words roughly accurate withholding. I want you all to think about this real quick. This form became simpler because whether you know it or not, the IRS has access to your income. Whether you know it or not, the IRS has access. If you work a job, they have full access to your income, meaning they can see what you make. And going forward here soon, if not already, if you're watching this video at a later time, they can almost get your income in real time because they have, let's say, they have relationships with credit bureaus now. You all remember what happened with Experian years ago when they had that breach of information that happened through the IRS? Just know that they have access to your income in real time. So no matter how you fill this out, you can choose A, B, or C, and they're still going to have access to your income. If you notice, look at this tip at the bottom. To be accurate, submit a 2021 Form W-4 for all of the jobs. If you or your spouse have self-employment income, including as an independent contractor, use the estimator. So what they're telling you to do is even the income they don't have access to if you're self-employed, if you use the estimator, you can enter that income in and get the most accurate view of, or the most accurate withholding from your paycheck. So this step 2, you can choose one, A, B, or C. Just know you have a choice. And if you want me to, I can break this down later on how to use the W-4 estimator. But for this video purposes, we're going to just look at it this way. All right, now let's get to the rest of the form. Complete steps 3 and 4 on Form W-4 for only one of these jobs. So here's the thing, if you have a job, so if you have a job where you're making the most money, you're going to fill this form out completely. Now, if you have a part-time job, if you notice it said leave those steps blank for the other jobs. So you only fill this out for one job. You only fill this out for one job. Now, this next section, 3 through 4. Now, if you have your low paying job, that's like a part-time job, you won't fill out sections 3 through 4 because it won't apply to you because you only get this credit once. That's why I said to do it on one job. So let's look at this. Let's go to step 3. Step 3 is to claim your dependents. So let's say, for instance, and this is simply reading, y'all, if your total income would be less than 200,000, 400,000 for married, filing jointly, less than that, then you're going to multiply these children that's under 17 by 2,000. So let's say, for instance, you have 3 children. So you're going to do three children that's under 17. You're going to multiply that by 2,000. And if you notice, 3 times 2 is 6,000. So you're going to put 6,000 there. And then let's say, for instance, you have someone that's over 17. So you have that adult child, as some people like to call it, that is still figuring things out. And they in between college or in between that age, between 18 and maybe 23, 24. It could be up to 26 for insurance purposes, but we're not going to go there today. So let's say, for instance, you got that person is in between. Well, you get 500 for them. So you got one of them. So you do 1 times 500. That's 500. So then we're going to enter the totals. So that's 6,500. Now look, if you don't have any dependents, you're going to put 0. If this doesn't apply to you at all, you literally put 0. For all my single people out there with no kids or no children, you put 0. Okay, so now this is where it gets interesting. And this is where I find my enjoyment at from filling out this form, because I help self-employed people, entrepreneurs, business owners keep more of their paycheck by understanding the strategy called income shifting. And if you want the breakdown for that full strategy of income shifting, we have a video for that too. But this video is strictly focusing on the W-4. Strictly focusing on the W-4 form. All right, so now that we got step 3 filled out, remember, if you're single, you put 0 there. We're going to continue filling this out as if you have children. So you put 6,500 there. All right, so let's get to step 4. Step 4 is, if you read this word right here, other adjustments. Now, let me tell you this. There's a huge difference between a deduction and an adjustment. An adjustment is above the line. Deductions are below the line. And what I mean by that is, if you go to a form 1040, let me pull this up for you so that you can see what I'm talking about. Let me see if we have a PDF. Here we go. All right. So if you notice, an adjustment is anything above this line, C, well, actually 11, because you have your AGI. And look, when I tell you all your AGI is the most important thing that you can control, this AGI, your AGI controls, if you have student loans, it can control or do an estimate on the amount of student loans you have to pay each month. It affects your income-based repayment plan or your IBRs that you qualify for student loans. And what that means is, if your adjusted gross income is low enough, you could be making $0 payments to your student loans. And with the new laws that's coming out right now around student loans, you could probably already qualify to have your student loans forgiven, and you're making $0 payments. So your adjusted gross income controls a lot of things. So number 10 is talking about your adjustments to income. And what this includes is if you have a business. And we're going to get to that next in just a second. So that's what this adjustments word means, is that above the line deductions. If you notice, IRAs up here, qualified dividends, some Social Security benefits, capital gain or loss, that's more investing, or other income, which you could lose money too. So all it is adjustments. Charitable contributions, if you have charitable contributions above a certain amount. And here's the thing, these adjustments is before you get to your deductions. So if you notice on the side, you remember I told you about single, married, filing joint, or head of household. So right here, single, you get the standard deduction of $12,400 in addition to the adjustment. Married, $24,800 in addition to the adjustment. And then finally, an adjustment can be an increase in income or a decrease. And we're going to talk about that. Or if I had a household, $18,650 in addition to the adjustment. All right. So now that we have adjustments understood, let's go back here. So if you notice, A on step 4 says other income, not from jobs. So this is from the IRA, the dividends, or a business, whether it's a loss or a gain. Majority of businesses don't make money in their first 3 to 5 years. They don't make profit. They just don't. Look, when you're in business, the truth about it is it's not easy. But if you understand your finances, you can stay in business a lot longer. So let's look at this real quick. Other income. So the way you fill this out is you have to go down to other income. And they didn't tell you this in this section, and they have it right here. But other income is on page 3. Not from jobs. So let's look at deductions. If you expect to claim deductions other than the standard, do y'all see this? If you expect to claim a deduction other than the standard and want to reduce your withholding, this is very important. It means that to reduce the amount of money you have coming out of your paycheck, then you use the deductions worksheet on page what? 3 and enter the result here. So let's go there. So this first one is if you have any additional income from your job, not from your job, other income that's not from your job, such as your retirement, dividends, all of that, interest income too. But this next part is for deductions for business owners. Let me show you what I mean. Let's go down to page 3. All right. So if you notice, this is the multiple jobs worksheet. You keep this for your records, but we're going to go to the deductions worksheet next. Keep for your records. Y'all see that? All right. So let's get it going. So you remember earlier when I told you that the government took away what's called your 2106 form, meaning that you used to qualify for a lot more deductions or itemizations on your Schedule A than you do now. Now you only have 3 or 4. Home mortgage interest is one of them. This is for people who only have a job. And you notice it says itemized deductions. So if you only have a job, this is what they're talking about. So I want to explain this to you so you understand what I mean by this. So itemized deductions meaning this amount right here has to be less than what you're itemizing for you to qualify for this. So let me give you an example. Let's say, for instance, you had your home mortgage interest, you had your charitable contributions, and your state and local taxes. If you notice, it's up to $10,000. Let's say, for instance, that totaled $29,000. That means that if you're married, filing joint, and these things equal to $29,000, you get the $29,000 instead of the $25,000. You don't get both. You get one or the other. So you either qualify for the itemizations or you qualify for the standard. Now, let me tell y'all this. 2 things happened when Trump took office years ago. And now we have another president. But when he took office, what he did is he raised these amounts up so high that you can't even itemize enough to, majority of people can't even itemize enough to exceed these levels. Think about it. If you gave, let's say, for instance, you're the average everyday working person, and let's say, for instance, you're making about $40,000 or $50,000 a year. And of that 40 or 50,000, let's say, for instance, you do attend church or you do donate to charities. One of the two, you attend church or you donate to charities, and 10% of your income goes to charitable contributions. So let's say you make 40,000. That's $4,000. Now you're single with no children. Have you itemized enough to qualify? And let's say, for instance, you say, you know what? I talked to my person that does my taxes. He or she told me I can use my home mortgage interest too. So now you got $4,000 from your charitable contributions, and then you got another $3,000 from your home mortgage interest. That's only $7,000. Remember what I told you earlier? You don't get both, you get one or the other. So you get the $7,000 or the $12,000. You don't get both. Which one do you think you get? Which one? Yes, you're right. You get the higher. So you're going to get the 12,550. So this is what I'm trying to let you know. Your itemizations don't help you as much as they used to because you don't get them if it's not above the standard deduction. And that's the only thing I want to show you in that section. All right. So let's get to, I'm going to skip line 1 and 2 because I just explained to you why you may not qualify for that, or you will qualify for. I'm going to skip these 2 lines. I'm going to go straight to the line that talks about you're having a business, whether it be real estate, whether it be a traditional business where you have a Schedule C, whichever one. This is what's called an adjustment. So I'm going to speak to people who are in real estate or have a Schedule C at this point. Let's say, for instance, remember what I said earlier, your first few years in business, you're going to lose money. It's just part of the process. Not saying that you shouldn't go out and try to make a profit, because that's the goal. You have to go out and attempt to make a profit. But let's say you don't. Let's say if you just the average everyday person who's doing their best to build a business and you're trying to get it off the ground and you're figuring things out. Did you know that you qualify for over 500 deductions as a business owner? I'm gonna repeat that one more time. You qualify for over 500 deductions as a business owner for your business expenses. I'm going to give you the name of 2 books that you can go pick up. Number 1 is called, let me see if I can find this book. One of them is called Lower Your Taxes Big Time. This is by Sandy Bakken. So this first book, go grab this book. This book is by Sandy Bakken. If you notice, he's a former IRS attorney and senior tax law specialist. This guy right here is amazing at breaking this down. So that's number 1. And then the other one is, I think it's 495 tax deductions. Remember, your business expenses are considered an adjustment. There you go. 475 tax deductions for businesses and self-employed people. By Bernard. This is by CPA Bernard Komaroff. I don't know how to pronounce his last name. So go pick up these books. If you're in business, pick up these 2 books. All right, let's get back to it. All right, so I said all this to say this. Let's say, for instance, you take I call them the Big 12. The Big 12 deductions you get as a business owner: cell phone, mileage for your vehicle, meals. You get advertising. Let's say, for instance, you spend money on somebody like me, a tax professional or tax strategist. Let's say, for instance, you spend money on some consulting fees, all of that. So the Big 12. If you want the Big 12, send me an email at kevinyoung@thetaxteachers.com. So if you want access to the Big 12 deductions you get as a business owner, I'll send you over a link that can help you keep track of your Big 12 expenses. kevinyoung@thetaxteachers.com. So let's say, for instance, that Big 12, you were able to write off $12,000 in expenses. So this is the thing. That is not, and this is what I want to let y'all know, that 12,000 will be negative 12,000 because that's how much you're writing off. It would be negative 12,000 because that's how much you're writing off. That's your cell phone. Let's say your cell phone is 1,000. You ate out to take clients out to eat to try to get business. Let's say that's another 2 or 3 grand. You're already at $4,000 just from that alone. Let's say, for instance, you got the internet. You need the internet for your business. That's another $100 a month. If that's what you spend, that's another $1,200. Look, all this stuff adds up over time. And let's say, for instance, you drove about 10,000 miles for business. That's another 5,000, roughly $5,000. So you're at the 12,000 already. So that's negative 12,000 that you're estimating that you're going to spend on your business. I want to pause real quick for a minute. That's an estimate on what you're going to spend on your business. Do you see right here where it says enter an estimate of what you're going to spend for your adjustments? So that's negative 12,000. So let's read this bottom line. Add lines 3 and 4 together into the results here on your Form W-4 form. So I'm going to take this number and go back up to this line 4, and do negative 12,000. I'm using a negative number because it's not a positive number, it's a negative number. It's how much I estimate that it's going to be 12,000. Now you don't have to put the negative sign, you put 12,000, but I want to put the negative sign there so you can see that it's not going to be like a positive number. It is a number that is, it's a deduction for 12,000, but it's coming off your income because it's an adjustment. I just want you all to see that. All right, so we put 12,000 there, and see, this is the part that adds about any extra withholding. I'm gonna tell you this right now. Keep as much money as possible. Now, if you're one of those people who are afraid, I don't want to say afraid, because you just need the knowledge. Don't send them more money you have to right now. If you're running a business, my advice, professional advice, is you need as much money as possible to run your business. You do. So now that we fill this form out, this is the last part. You sign here. And if you notice that this form is not valid unless you sign it. You sign it, date it, and then your employer fills the rest of this out. And you're done. That is your entire W-4. It is so much simpler to fill out, but it's only because they have a lot more information about you, and also you're not gonna keep as much money as you used to. Like in the past, you could put exempt or 10 on here, and putting exempt doesn't help you because you're gonna have to pay them now or later. A lot of people don't realize that, but whether you put exempt or not on here, they're gonna base it on how much money you make and how many withholdings you have. And you just need to fill it out true and correct and complete. Follow the rules. All right, that has been all for your W-4 today. If you do want to reach out to me, I gave you my email address earlier. You can email kevinyoung@thetaxteachers.com, and I can assist you any way I can to help out. Thank you all for having me. If you have any additional questions, just send me that email. Y'all have a great one.